Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Happy Monday.
Bruce, I had a great weekend. I hope you did as well. I see that you're still on the boat, so that's awesome.
Yep, still
I'm
on the
not.
boat, and I'm going to work from the boat today.
All right, good deal. I know you
Somebody's
get
got to
plenty
do
done.
it.
Hey, listen, I know that buying and selling condos is, to me, a more complicated thing, a more complicated transaction. And honestly,
Yeah.
I believe, correct me if I'm wrong, but I think Freddie and Fannie just made it a little bit harder to sell a condo. The financing rules changed. So give me a little bit, what's going on with the financing rules?
It's interesting because Fannie and Freddie have been pushing to make it a little bit easier for people to buy condos, but they went the opposite direction. And part of the opposite direction they did is they've now eliminated what they call a limited review. So let's just back off for a second. When somebody wants to buy a piece of real estate, they have to qualify, and they qualify for a particular type of loan: conventional, Fannie Mae, Freddie Mac, FHA, VA, could be any number of those types of financing. But it doesn't stop there with the condo, Tom, because a condominium itself has to qualify, and it has to meet the requirements of Fannie Mae, Freddie Mac, and HUD for FHA has their own guidelines, which are even more restrictive. And then VA's got their own, which are a little bit more relaxed, but still not completely. So they've all got their own requirements. So regardless of how strong the buyer is that wants to buy the condominium, doesn't mean that financing is going to be available for them in any type of traditional type financing. They may have to or be forced to go to an alternative product. So let's talk about why that's happening. So Fannie and Freddie said no more limited reviews. So what's a limited review? When a lender to determine the qualifications of a condominium, how many units they have, how many owners versus renters, how many delinquencies, what are the reserve requirements that they have, how much do they have in reserve. There's all kinds of things. That the standard condo questionnaire is about 100 questions. It goes into how much insurance they have, what their coverage is, what their deductibles are. There's a lot that goes into it, because people that are buying a condo don't have the control over the future and special assessments and other things like that you would on a home. And anything can happen on a home. You need a new roof. You're going to special assess yourself. But on a condominium, you might have to pay for a roof from 3 units down for you, because everyone is collective in that. So
I think a lot of people miss the point that a condo, you don't really own anything physical. You own occupancy of the space.
You own the interior walls,
and the things that are inside, but you don't own down to the ground. You don't own up to the air, but you share in the ownership of all of that. Right.
Exactly.
And I think that's where a lot of people really get, because they think of it like an apartment, but a home, and it's got a mixture of both.
It does. And these condominiums right now, when you think a roof is expensive to put on a house, try putting them on a whole condo complex, and then think about how much that's going to be in a special assessment, or if you have to repave your road, or if you have to resurface a big community swimming pool. Could be any number of things. Just the lawn maintenance and things like that can be huge for condominiums. And that's why they become, people look at a condo and go, I can buy a condo a lot cheaper than I can buy a house. Yes, you can, but the payment's not going to be cheaper by the time you add everything into it. So anyways, as I digress, they took this limited review that was 10 questions. It was like, how many units do you have? And give me a copy of your master insurance policy. And how many renters to owners are there? And it was basic. There's 10 questions. It was simple. And they went, no, not doing it. But here's the thing. To get a limited review, you had to put down at least 20% owner occupied and 30% investor. So the requirement, the borrower had more skin in the game just to get a limited review. So now they've eliminated that completely. They said it's either full review or nothing at all. And that happened on August the 3rd. So any applications for condominiums after August the 3rd are going to get a lot tougher. Now,
Yeah.
since we saw the collapse of the Seaside building in Miami where 97 people were killed, it's changed the whole dynamic of condominiums. So now there's more financial review, there's more structural reviews. And if you're over 3 stories, you have to have all these structural engineering reports done and meet
Right.
their requirements as well.
Yeah,
That's
and
when
obviously that's all, that's all Florida based specifically, right? Which is where
that
you and
is
I
true.
operate.
That
Whereas
is
the
true.
Fannie Freddie stuff affects everybody regardless, right? Now,
Now,
I understand that there's a new thing now with the reserve. You've got it down there in the screen that reserve requirements are going up to 15%, whereas before I think they were 10, right?
so yes, they were 10. Now listen,
Yeah,
they went to 10, and that's when a lot of these condominiums fell off the approval list. So they couldn't even make the 10%. So now they're raising it to 15%. So only these condominiums that are rich with reserves are going to be able to handle this. And therefore, if you are buying a condominium, I would be very cautious about something coming up where you may have some type of a special assessment and might render it unaffordable for you. If
Sure.
you are trying to sell a condominium, you are going to struggle because now the only people that can buy them, if you can't get your condominium fully approved, and my advice for anyone listening to this, if you live in a condo, you want to buy a condo, you get involved with the association and you make sure they meet Fannie, Freddie, and HUD requirements. If they do, your values will maintain. If they don't, your values are going to plummet. And
Right.
there's
Because then the
nothing
only
you can
people
do.
that can buy it is going to be people that are doing cash
Or large down payments. They
Yep.
don't care about interest rates because interest rates on these subprime type loans or alt A type loans, even if you had an 800 credit score, if the condo doesn't qualify, you're not getting the 6.5% rate. You
Right.
could on an alternative, but you're going to have to buy it down to that.
Now, I
So
would
there's
imagine, Bruce, correct me if I'm wrong, but I would imagine that the positive side of the new rules that Florida put into place, right, which ultimately I think are good because it's going to raise the bar and make condos a better product overall. We're going through
Yes.
the pain right now of getting it there, but I think ultimately that's a good thing. And that should help with this reserve requirement thing, at least here in Florida, where most condo associations should be more healthy because the state has put a serious requirement on them of having reserves for repayments.
now the feds have too.
And now the feds have too.
Yeah, but you think about this. You think about somebody that had a condo because it was affordable. They had a $300 a month HOA fee.
Yep.
Now
Yep.
it's 600. Okay. And maybe their taxes have gone up a little bit. Then they got a special assessment that they had to come up with $2,500 more dollars. Some people just can't afford to do that.
Yeah. I mean, it is what it is, right? We can't fix for that, right? But because that happens to me in my home. I had to put a new roof on last year. I had to replumb the house last year. I had to repaint the house last year, right? I think I dropped 50 grand last year on my house and nothing changed, right?
Yeah.
Except the paint color. But these are things that we deal with as homeowners, and renters do it too, because even though they don't pay
Well, if you passed on to a tenant, it's going to be
it's passed on. It's part of the thing. But I'm going to tell you something that I find really interesting. Florida did something else really cool for condos to help us out. So there's now, as an agent, as the listing agent or the selling agent, I have to get the 12 months of last board meeting minutes and get them to the buyer. And the reason for that, the reason that's important is because they have to start talking about these special assessments long before they happen.
Yep. Yep.
And
so it's going to be in the minutes.
It should be in the minutes, right?
By somebody. And this is part of the review now too. So they want to see that. They want to see what the minutes look like to see if something was uttered and go, hey, building 4 needs a new roof. And I think we can get an insurance claim on that because I think it might be hail damage. So then what they do is they get an insurance company and they make a claim. And then the insurance company goes out and denies the claim. Now we have a huge problem on our hands. Now, you said you have a roof problem. So now we know we got a roof problem. And now you have to report that in your minutes, but now you had a denial. Now, how are you going to pay for that roof? Special assessment.
And so I think ultimately, and that's absolutely right. And I think that's a great reason to have that rule about pulling those minutes. But I think, again, as these condo associations get more healthy and build the reserves properly, right? I think we're going to have less and less special assessments. We probably have 3 or 4, maybe 5 years more of some pain, depending.
Yeah,
but
I think
ultimately we should get to a place where we are better, right? It's kind of working out. We're going to get stronger.
Right. Yeah, hoping that you're right, and I hope that does make a difference. But right now, if it were me, I would not want to be trying to sell a condo, and I definitely would not want to buy a condo until the dust settles. At least we got to see some.
I don't know that I'm gonna disagree with you on that. I think there's an opportunity. I think there's an opportunity. I wouldn't buy just any condo. I would be super careful. But here's the cool thing: is you've got this cloud over condos. Condos suck. They're horrible. Blah blah blah. You get special. If you go and buy one where the reserves are healthy, they just went through the thing. Everybody just got hit with $100,000 assessment to fix all the problems, and the problems are fixed. Okay, that might be a good place to buy.
That very well might be, and I hope that you find that one, because they are a diamond in the rough, and I'm sure some of them do exist. I'm just not seeing a lot of it. That's all. Listen, and I don't disagree with that. I'm saying personally, I'd be very cautious. And maybe I overstated saying don't buy one, period. That may not be correct. There may be a few out there that meet the requirements, but my advice is, if you are considering buying one or you do own one, you need to highly encourage the condominium association to meet the requirements, or else you will lose money.
Absolutely. Unless you're paying cash and you want to buy one before they do meet the requirements, because then you get them to fix it after. And you gave yourself some added equity, right? So, I mean,
I love the fact that you're optimistic about this.
Listen, you know what? I always try to be an optimistic guy. I am a little frustrated that as they just passed the 21st Century Road to Housing Act, which I think is, I don't care if it works or not. It's a sign that they want to do something to help the housing situation, right? And then they go and do this and screw it up and make it harder. So, it's still typical big government, not one hand not knowing what the other one wants to do and causing issues. So, hey, we're gonna move on from condos really quick. So, what is going on in the market right now, Bruce? Are we seeing a positive day? Are we seeing a negative day? Are we hovering around 6.5 right now? What's going on?
Today, the bond market started down a little bit. It was down 10 basis points when the market opened. It's down 29 basis points right now. Not a great sign. I think that there's still a lot of uneasiness with the whole Strait of Hormuz, but I think that we're going to see some very volatile times until we get this situation under control. Now, rates did have a decent week last week. We had some good days in the market. Are we where we want to be? No. I think interest rates right now are up. Let's see, the national average right now of the 30-year fixed right now is about 6.7%. You can see that is up just a little bit.
Yeah.
6.69 is and crude popped up over that $80 again. It's at 82.3 or 80.32. So it's a little bit above the $80 mark. But
so I've got a couple of buyers that I'm going to be putting under contract today, and obviously they're going to have 30 days or whatever to close. So would you suggest a wait and see approach to the rate lock?
I'm very cautious about floating in this market. It's really dangerous. It's been a ride in a stagecoach for me. Every day I come in, it's like, yay, it started off, we're going in the right direction. And then it's, what just happened? So it's just that way right now. Now, the good news is, if we look at a bond chart, that you're not seeing giant swings where your rate's going to 7.5% overnight. But 3 weeks ago, it was 6.58. Last week, it was 6.66. This week, it's 6.69. We're not talking about huge moves in the market. We're talking about small moves. But the media is like, oh my God, we're at an all-time high right now. Yeah, we went up
I know.
100 basis point. Okay.
They're always trying to throw water on the fire. But one of the things that I'm doing right now, I'm going to tell you, and any agent that's still listening to this is something that I'm doing that most of us don't do, and I'm starting to do it now.
What's that?
Is in my contract, I'm putting that the buyer is buying up to 7% interest. So I'm putting a cap that they will not, if as soon as it goes above 7, my buyer has the opportunity to back out. Doesn't mean they have to, but I'm giving them the option, right? Because under 7, if they're good, they should be able to, that's okay. When it starts going above 7, they might not be happy about being stuck in a contract. So I want to give them the opportunity to do that. Pick a number, whatever your number is, but definitely put it in your contract that your buyer is not going to go above a certain interest rate.
Yep. And you could, if you want to, just to be safe, you could cap whatever points they can pay too. So because 7%, somebody can say, I can get you 7%. It costs you 3 points. Hopefully it doesn't get to that. But if you want to protect them just a little bit more, then it would have to be 7% at par.
Yep. Cool.
Okay.
Bruce,
So
it's always a pleasure, my friend. Hopefully somebody gets something out of this and maybe we sell a condo or two.
You got 2 contracts coming in today. I can't wait. Let's go get them, baby.
You got it, man. Make it a great one.